everyone. Hope you're doing good. So we'll get started with the new topic, that is insurance claim for loss of stock and loss of profit. Yes. So again, this particular topic deals, if you have to split this topic into overall view, you have to find out something known as insurance claim for the loss of stock and insurance claim for the loss of profit. Probably in today's session, we'll only be touching upon loss of stock element. Theoretically, not much concept that you need to know. It's very, very straightforward. A mishap has happened, meaning due to some earthquake, fire, flood, short circuit, whatever, a company has lost its stock which is there in the factory, that has been lost due to whatever reason, fire, flood, earthquake, blah, 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 blah. That particular stock, do you think anybody will leave it uninsured, especially businesses? Would they like to take that bigger risk? No. Normally the stocks will be insured. If it is insured stock and if that goods are destroyed, what do you think the company will do? They will try to claim that stock value from whom? From the insurance company. That is what is the first aspect of this particular topic. Due to some particular unfortunate event, a stock has been destroyed. We have to find out how much is the value of the stock that has got destroyed and how much money we can claim from insurance company. That's pretty straightforward. That's all is a theory that you need to know for the time being. Okay, now people? Okay, so yes, I think we can directly start with a question. Hardly any concepts are there over here. Whatever concept is necessary, if there's anything extra that comes in, we'll take care of it as in with the help of question itself. So let's start maybe from question number 2. Question number 2. Mr. A prepare accounts on 30th September each year. When they say he's preparing accounts, what they mean is he's preparing his final accounts. Normally, what is financial year, sir? Normally, it is 1st April to 31st March. But this particular Mr. A, he's preparing accounts not on 31st March every year, but on 30th September. That means his financial year is what, sir? His financial year is 1st October to 30th September. Is this okay, sir? Is this acceptable? Generally, no. But let's not question the question. Go with the flow. Is this okay? In foreign countries, generally they allow you to choose. But in India, due to many things, we choose April to March as the financial year. Okay, there are a lot of impacts if you change the financial year, especially with respect to tax and all. You'll learn as per AS 22 and Ind AS 12 and all. It creates a lot of havoc. So that's the reason they stick to April to March to make the accounting treatments a lot easier. I think there's not the stage too much to talk about that, but it has some impact. That's the reason we keep April to March. But for this problem, what is the financial year, sir? 1st October to 30th September. Yes, that's what they've given. But on 31st December 20x1, a fire has destroyed the greater part of his stock. One fire has occurred, which has unfortunately destroyed his stock. Some information was collected from his books. Okay. Stock as on 1st October 20x1. Okay. 29,700. Purchases from October to December. So how many months purchase they have given? October, November, December. 3 months ka purchase they have given. Then they have given wages from October to December. That means this data is also for 3 months. Sales also for the same period. That means this is also for 3 months. Why have they given October to December? We don't know. Let it be. But we know that when did the fire occur? 31st December 20x1. Underline that. That is your date of fire. That is important pointer or data that we need to keep in mind. Okay. The rate of gross profit is 33.33% on cost. That is nothing but 1/3 on cost. 33.33% is nothing but 1/3. If you do 1 divided by 3 in your calculator, what are you getting? 0.333333, correct? No. 33.33% also if you calculate, meaning 33.33 divided by 100 you do. What are you going to get? Same 0.33333. Okay, if you want to express it in fraction, it becomes 1/3. If you want to express the same thing in percentage, it will be 33.33%. Okay. The stock to the value of 3,000 was salvaged. That is salvage value. Okay, I'll come to that a little later. Insurance policy for 25,000 was taken and the claim was subject to average clause. I'll tell you what this average clause is also all about. Okay, so this is the data. What do you need to find out? Or they've given additional information also. Stock at the beginning was calculated at 10% less than cost. That means, have they valued the stock at the beginning? Means, can I say this is opening stock? Stock at the beginning means opening stock. Is it valued properly or 10% lesser? 10% lesser. Okay. So that means whatever number they have given, is this the right number or we have to rework? We have to rework because they have valued at 90%, can I say? Because they are valued at 10% lower. 10% lower means, can I say it is 90%? But the correct value of that should be 100%. So I'll tell you how to work that out. A plant was installed by the firm's own worker. Some big plant and machinery means it requires some installations. Especially if it's a big plant and machineries, if you see big companies like Coca-Cola and all, their machinery only will be like almost 1 kilometer long. That big, the process, the whole setup and all. Okay, so you need technical people to install that. Yes. So the plant was installed by the firm own worker. So did we get any outside party to install plant and machinery or our own employee did it? Our employee did it, but we didn't want to keep anyone's ass on. So what did we do? We paid him 500 rupees. Told take 500 rupees for installation. All right. Okay. Which was included in wages. People, right or wrong? Wrong. What is wrong? Sir, wages paid for the installation of plant and machinery, is it a revenue expenditure or capital expenditure? Many of you have come through foundation route. This is a capital expenditure. So capital expenditure means this should not be transferred to wages account, but rather it should be added to the cost of machinery. Yes or no? Correct? And we have done AS10 also. If you have attended AS10, we'll be doing it here. Okay. Yeah. Okay. With this, all of you know that it's a revenue capital expenditure and it should be capitalized. Correct? Capitalized meaning it should be added to what account? Plant account. But what did they do? They added it to wages account. So wages, value of wages given in the question is correct or incorrect? Incorrect. Can you tell me, just for curiosity, what should be the correct entry over here? Wrong entry, not required, just for the sake of my satisfaction. Wages paid for installation of machinery. So what should be the correct journal entry? Plant and machinery account debit to cash or bank, how you have paid, that is 500. Correct? What did our accountant do? He included this 500 not in plant and machinery but in wages. So he passed the entry wages account debit to cash account. Is it okay? This is the wrong entry. How do you rectify? Is there any mistake in cash check? Cash should have been credited and rather it is credited only. What should have been debited? Plant and machinery. Did he debit? No. That means now what are we going to do? We will debit plant and machinery account by 500. But rather what did our accountant debit? Unnecessarily he debited wages. So what we have to do now? Cancel that by crediting wages. This is your rectification entry. Comfortable? So what did I say in the previous session? The trick of rectification entry is rectification entry and wrong entry. If you add these two, you should get correct entry. Add now, check. Wages debit, wages credit. Got nullified. So effectively, what are the entry you're getting? Plant and machinery to cash. Correct entry is also plant and machinery to cash. Fair enough? Okay. Now, as part of rectification entry, what are we supposed to do for wages? Credited. Wages is an expense. Expense as per nominal account rule will be debited, but rather all the expenses account will have a debit balance. Something which has debit balance, if you credit, what will happen? It will reduce. So basically, the impact of this transaction is wages account should be reduced. Okay, now all this not necessary, just extra fitting from my end. Okay. Purchase includes purchase of plant for 5,000. Change the accountant, I tell you. Purchase includes purchase of plant. Sir, purchase means what? Purchase means goods. Correct? Goods andre? The thing that you buy and sell. The material which you buy and sell, we refer it to as goods. And that only is accounted as either purchases when you buy it, sales when you sell it. But here, purchases include purchase of what? Plant. Plant means plant and machinery. Is plant and machinery your goods or is it a fixed asset? Fixed asset. What did our accountant do? He included that in purchases. Bindas. How much value? 5,000. So what we have to do? You have to so purchase, can I say, is unnecessarily increased. What do you have to do now? Reduce. I'll not tell the entry and all. You just have to reduce. Is it okay? Everyone? Okay. Now, you are required to calculate the claim for the loss of stock. Can you tell me how do we do this? Okay, yeah. All right. So now, coming back to this particular question, how do you compute the value of the stock? Any thoughts from your end? Don't look at the solution, just tell. 1 minute, sir. Oh, you're saying opening stock. Okay, let me hear what you're saying. Opening stock?
We have to add purchase.
Okay.
Purchase in that period, 3 months period.
Perfect.
And we have to add means wages, direct expense.
Okay.
We have to deduct sales from it.
Okay. Then you'll get closing stock. Perfect. Sir, tell me trading account ka format. Trading account ka what comes? Trading account. Have you done? Yeah, remember. Debit side, you tell me what are the components of trading account. Opening stock, purchases, direct expenses. Okay. Direct expense could be wages, factory rent, whatever. Okay. That is direct expense. On the other side, sales of closing stock. And what you will get as balancing figure? GP. Correct? No? So if I give you opening stock, purchases, direct expense, gross profit, and also sales, can you not find out closing stock? As what? Balancing figure. That is the reason they've given you all this data. That is what sir is also telling. Is it okay? Simple trading account you need to prepare to get closing stock as the balancing figure. But trading account generally you used to prepare in all your bachpan or your golden days. You used to prepare for whole year. You used to prepare it for the whole year. But here, am I going to prepare it for whole year? Do I have data? Check on which data stock I want. First, you tell me that. Which data stock I want now? I want stock as on 31st December. Why 31st December? Because 31st December is the date of fire. On that day, I want to find out how much was the stock available. And that much value of the stock, I'll try to claim from whom? Insurance company. Agreed? So I will prepare the trading account not for 12 months, only 3 months. Why? Data given only for 3 months. Check the data. They have started the data as on which dates? 1st October. So I'll prepare the trading account only from 1st October till 31st December. So 1st October ka stock will become your opening stock. 31st December ka stock will become your closing stock. So opening stock is given, purchase, direct expense given, sales given, GP they have given some percentage, so we can find out GP. The only component missing is closing stock, which we will get it as a balance. Simple trading account. Can we do that?
Yes.
Are we okay, everybody? Yes. Okay. Before that, in your notebook, write one pointer. They've given something over here. What are they saying about GP, sir? GP is 33.333% on cost. Write one table. I think some of you have already written. I don't know. I'll just write it just to be on the safer side. Perfect. Correct. That only I'm about to write. Yes. If GP is half on GP is half on, first we'll write COGS. If GP is half on COGS, then it will be 1/3 on sales. If GP is 1/3 on COGS, it will be 1/4 on sales. Go on adding one number to the denominator. If this is 1/4 means this will be 1/5. If like this, if this is goes on, this is 1/9 means
110.
that will be 110. Like this. This is an equation. Write this down in your book. Let it be there. Or if you want, you can write it in fraction also. Half is nothing but 50%. 1/2, if you're doing a calculator, you're going to get 0.5. That is nothing but 50%. 1/3 is nothing but 33.33 percentage. Or you can express this also. 1/3 is 33.33 percentage. 1/4 is nothing but 25 percentage. Because 1/4, if you do in your calci, you're going to get 0.25. Here you write 25 percentage. This will be 1/5. If you do in your calculator, you're going to get 0.2. That is nothing but 20%. Okay. Generally, this two will be tested, or maybe anyone among these three can be tested in your questions. Okay. Sometimes they'll give it as percentage. Sometimes they will give it as fraction. Use both, whatever is comfortable. Somebody is saying, tell the logic of this, sir. Okay. First, write. Update your notes. Okay, we'll explain that also.
On cost 1/2. So it means that 1 rupee profit on cost of rupees 2. So the sales price become rupees 3 and profit will be same 1.
Yeah, I mean, you can interpret it in multiple ways. I'll just give you a simple way. Anyway, these are fractions. You can derive it on multiple ways. That's all right. That also acceptable. Have you copied? Okay, it's a simple mathematical equation according to me. Let's take, okay, one I will prove it to you. You tell me which one you want me to prove. One among these three you choose. Whatever is your number. Or what is given in this problem, we'll take this only. What is given in this problem? 1/3 on cost. If GP is 1/3 on cost, then it will be 1/4 on sales. This is what they have given in this problem. Let's prove this only. Okay. Give me a number divisible by 3, sir. Preferably a little smaller number. What number? 3, maybe I'll take it as 21. It's okay. Okay. Cost is 21. Okay. Sir, as per this equation, what is profit, sir? Profit is, no, just check this equation. What is the profit? 1/3 on cost you can write, or on COGS. Both are okay. Here cost means COGS basically. So, okay. So, cost is 21 rupees. So, how much will be profit, sir? 1/3, right? That is the equation we are trying to take. So, 1/3. 1/3 of 7 is how much, sir? 21 into 1/3 is nothing but 7, no? 7. Okay. All right. Sir, how do you get sales? Cost plus profit is your sales. Agreed? So, add. How much will be your sales then? 28 rupees. Okay, G? Yes, no? So, compare. Profit on cost you do. How much are you getting? Profit is how much? 7. Cost is how much? 21. How much is this? 1/3. That means the profit is 1/3 on cost. Okay? All right. Let's now do profit upon sales. Profit is how much? 7. Sales is how much? 28. How much is it coming to? 1/4 on what? Sales. What did our equation tell? If profit is 1/3 on cost, it will always be 1/4 on sales. And it's just a mathematical way of representation. That's all. Okay, you can prove. If you forget the equation, assume random numbers like this and try to retrace that equation. Is it okay? People are okay with this now? So that means what is the equation that is getting triggered over here? If profit is 1/3 on COGS, it will be 1/4 on sales. Now, cost here means COGS. Sir. COGS is what? Cost of goods sold. How much is? How do you get cost of goods sold? Opening stock plus purchases plus direct expense minus closing stock. Now you tell me, can you find out GP using COGS approach? You can't. Why? Do you know closing stock, or that only you're trying to find? That only you're trying to find. If you don't know closing stock, do you know GP? That means, can you use COGS equation? What is next best available? If GP is 1/3 on COGS, then it will be 1/4 on sales. Do you know sales? Yes. That means directly convert and apply. Straightforward it will become. Yes, no? That's all. Can we take this up now? Oh. Coming back, okay, I'll just maybe put it up here. Question number 2, no, this one. Okay. I'll prepare something known as, how do I get closing stock, I told? By preparing trading account. But am I preparing trading account for the whole year or only for 3 months? 3 months. Hence, I'm just going to call this as memorandum trading account. The word memorandum in accounts means rough work. This is not an actual books. This is only a statement done or a working note done to find out only one component, which is what? Closing stock or the stock destroyed on the date of file. Hence, we are calling it as memorandum trading account. Okay. So, memorandum trading account, we are preparing for how many months? 3 months. What period to what period? From for 1st October, or you can write from 1st October 20 X1. No? Okay. To 31st December 20 X1. Simple format of trading account you put, that is particulars amount, particulars amount. Is working note also memorandum? Yeah, working notes are also memorandum. Any rough works that you're doing, all memorandum only. That means I'll start calling that as, instead of working note, memorandum notes. Call, but nobody will understand. But Sir, what are we going to do? Closing stock for our topic. You have to find out the closing stock. That only is a topic. Okay. I'll tell you. Let me finish one full question. So that means you will probably get that. Okay. Sir, I'm doing trading account only for this period. Okay, na? Why 31st December? Because that is the date of fire. Why 1st October I have chosen? Majburi. Why Majburi? Because data is only given from 1st October. If they had given the data from 1st June, I would have done it from 1st June to 31st December. If they have given it from April, I would have done it from April to December. But here the data is only given from 1st October. So I'm forced to do it from October. Choose the data, that becomes your starting point. Okay, people? Okay. So first component of trading account. Solangappa. Opening stock. Opening stock means stock as on 1st April now or 1st October? 1st October. Check the problem, given or missing? Given. How much is that? 29,700. Josh may don't write. 29,700 is the value given, but was there any adjustment? Yes, read the adjustment. They told stock at the beginning, meaning opening stock, was calculated at 10% lower than the cost. So, is it valued properly or mistake? So, they are valued at 10% lesser means they are valued at 90%. So, 29,700 is the value for 90%. We want correct value, which is what percentage? 100%. For 100%, how much? Like this. Okay? Or simply, you don't have to show this dabba. 29,700 represents 90. We want 100. So, into 100 divided by 90, you do. That's all. 33,000. That is the correct value of opening stock. Did everyone get this? Online, offline, everyone? Or don't do 29,700 plus 700. Okay. Division, multiplication go hand in hand. Okay. So, addition, subtraction don't go hand in hand. Like, do 30 plus 10%. How much are you getting? 30,000 plus 10%, which is 33,000. Do 33,000 minus 10%. You will not get 30. You will get something else. How much are you getting? 29,700. That's what I meant. Addition, multiplication, division works perfectly well. Backward, forward. But addition, subtraction does not work like that. So don't do that approach. Stick to this one. Okay? More mathematical, but I hope you got it. Okay. Somebody is saying, telling too much. Okay. What to do? Somebody is asking. No, have to answer. No. Okay. Opening stock over. Next what? Purchase. Given or missing? Given. Check the data. How much is purchase? 75,000. But is that value of 75 absolutely correct or some adjustment was there? What jugaad happened there? Purchase includes plant purchased. How much value? 5,000. One plant that is fixed asset purchase, they included it in purchases. Hence, what we have to do? Reduce it. So the actual value of purchase is not 75, but rather only 70,000. Okay, sir? All right. Then, after purchase, you will get some direct expenses. Do we have any direct expense? Yeah, we have wages. So to wages, what is the value of wages given in the question? 33,000. Is this correct, or here also some mistake? Mistake. What mistake? Plant was installed by one worker. For him, you paid a wages of 500. But that 500 was included in wages. But actually, it had to be included in fixed asset or plant account. So they've included in wages. What we have to do now? Reduce it. That means your wages is only 32,500. Okay, this is over. On the other side, what will come, sir? Sales. Do you know sales from October to December, 3 months? Yes, given. How much is that? 1,40,000. Sir, the moment you know sales, patapat I can put GP. Because we know equation, they told GP is how much? GP is 33% on cost. That is nothing but 1/3 on cost. If GP is 1/3 on cost, just now we wrote, what is that? If GP is 1/3 on cost, then it will be 1/4 of sales. And what is your sale value? 1,40,000. If you don't want to use a fraction, use percentage. 33% on cost is nothing but 25% on sales. That also okay. How much? 35,000. Everything of trading account you got except one thing, which is what? Closing stock. So you will get closing stock as what? Or maybe 1 minute. Format, no. So let me write it here. You will get closing stock as a balancing figure. So can you get it as balancing figure? Look at the heading. What is this? Memorandum. Memorandum means it's a working. To find this, only we are putting up this particular trading account. So you can get this as balancing figure. That is fine. How much is the total? Here, sir. This side total is 1,70,500. That side also should be same. So your closing stock is 30,000. So that is the value of closing stock which has got destroyed on the date of fire, which is 31st December 20x1. Okay, people? Any confusion? Can I move forward? What did they ask us to find out? They not only asked, you need to find out the claim for the loss of stock. One problem, pay full attention. And again, next 6-7 problems more or less will run on the same concepts in same format also. So I will give statement of claim over here. Statement of claim. Because that also they have asked, no? How much money you'll be able to claim from insurance company. Okay, first, what is the closing stock or stock on the date of fire? I'll write like this. What is the stock on the date of fire? That we already got it here, no? 30,000 fire. Okay. Less something known as salvage value. Check the problem. Do we have something known as salvage value? How much is salvage value? 3,000 given in the question. I have to reduce this. Can anyone tell me why? What do you mean by salvage value? Why do we need to reduce it? See, we can understand that the stock is destroyed by a fire. Okay. Is it necessary it has to become absolute ashes? If there is a fire, you'll wait till it is absolute ashes, or you'll try to extinguish the fire? Extinguish the fire. So in that process, some part of the goods may get retained. It is damaged, all right, but it is retained. Can you sell that as a raddi or scrap? Yes, that only we're talking about salvage value. Though the stock is destroyed, it is not rather fully destroyed. You will be able to still recover how much money from those stock destroyed? 3,000. Sir, they say you must have studied in your BCom and all. Insurance is a contract of indemnity, they say. Have you heard about this? Indemnity means how much ever loss you have suffered, that much money only insurance company will give. This 3,000 rupees, is it really a loss? No, because you will be able to recover this as salvage. Hence, insurance company will not give you full money, rather they will reduce salvage value. Okay, that's the component of this. If they have given in the problem, put it. If it is not there, leave it. In this problem, it is very much given. In that, you can also add something known as firefighting expense. Some problems they will give. Obviously, to fight out the fire, you may call ambulance, or fire fighters and incur some expenses. If at all they have given in the problem, add it, because even insurance company will reimburse you that. Like if you take health insurance means hospital bill they should cover. They'll not only cover hospital bill, they'll also cover ambulance charges. If you have claimed, you will know this. Even ambulance charges, you will be able to claim. Same concept over here. If you have incurred any firefighting expense, insurance company will allow that. In this problem, given a G, if it isn't given, you will add. In this problem, not there. Okay. All right. So you can call this as either net claim or loss of stock. Both are okay. So how much is this? Can you tell me? 27,000. This much money you will be able to claim from insurance company. Allah. This is part. Hang on. Till you're okay. All right. Now check the screen, all of you. One small concept has come. I will explain this concept with the help of this particular problem only. That is called as what, sir? Average clause. Average clause. Okay. Or you can write like this. 1 minute. Hang on. I'll write like this. Can I move this? Yeah, I can. Claim as per average clause. Loss of stock into policy value divided by stock on the date of fire. First we will do, then I will explain you. Remember, actually you don't have to remember the formula, you'll automatically remember it. It's okay. First let's calculate this. Do you know loss of stock, sir? How much is the loss of stock I've called out here? 27, first 500. First I'll calculate, then I'll explain. Into policy value. Have they given policy value in the question? Check. Policy value means how much you have taken the insurance for. Insurance policy was taken for 25,000. So multiply that. Divided by stock on the date of fire. Do you know stock on the date of fire? Yes. How much was that? 30,500. Do this and tell me what is the number you're getting. 22,000. 541. Can I write? So this is your final claim, which insurance company will allow. 22,541. So I didn't understand last part, sir. No problem. I'll explain. But before that, I have to do something which is important. Sir, so lazy you are. Yeah. Okay, over. Okay, listen everyone for 2 minutes. What is this average clause? Average clause, okay, is a concept that gets triggered in case of under-insurance. What did I say? In case of under-insurance, one particular concept will get triggered, that is average clause. What is that? This is basically brought in to protect the interest of insurance company. Okay, check the screen, all of you. Complete attention, everyone, please. What is the stock that got destroyed on the date of fire? Stock that got destroyed on the date of fire. Okay, maybe I'll take this only. Okay, 27 net claim. Okay, fine. Final value. How much is this one? 27,500. Okay, final loss for you is 27,500. Agreed? After taking away salvage value, you are expecting to recover how much from insurance company? 27,500. Correct? You know what insurance company will tell? Boss, fine, no worries. 27,500 full claim I will give you. 27,500 full I will give you, provided you have taken the policy for the right value of the stock, which is what? 30,500. If you have taken insurance for 30,500, why 3,500? That was your value of the stock. How much ever is the value of the stock, that much you should insure it, no? Correct? What was the value of the stock? 35. So insurance company will tell this. If you had taken insurance for policy value for 30,500, I will give you how much? 27,500. But did you take policy for 3,500 or what did you do? You were being conjuice. You took it for a lesser value. How much did you took the policy for? You took the policy only for 25,000. Now insurance company will give full claim or will they prorate it? They will proportionate it. If you have taken policy only for 25,000, how much claim will you get? That only is the formula. This you understood, huh? Everyone, once more, confirmation give this particular dabba which I have put. Everyone okay? Once more, just to be on the safer side, can I say? Okay. What is this 27,500? That is the claim you are expecting to receive. After salvage value, you are expecting to receive how much money from insurance company? 27,500. Insurance company will give you full 27,500 provided you have taken the insurance for the correct value of the stock on the date of fire, which is how much? 30,500. If you had taken insurance for 30,500, insurance company would have given you 27,500. But you took the policy only for 25,000. So hence, insurance company will not give full value, rather they will proportionate it. This is the case of under insurance. How under insurance? You should have taken policy for 3,500, but you took it for 25,000. So you have took it for higher value or lower value? Lower value. So obviously they will proportionate it. Okay, 1 minute. So is this okay now? Now, how do you calculate X here? To calculate X, what are you going to do? 25,000 into 27,500 divided by 3,500. This is in numbers. Express this in words now. What is this 25,000? What is this 25,000? Policy value. That's what I've written here. Okay. What is this 27,500? The loss of stock. That is what I've written here. Loss of stock. What is this 30,500? Stock on the date of fire. That is your denominator. Now you tell me, should you have to mug up this formula or automatically it will come to you? By looking at the number, you can construct. Now, if you feel you've forgotten, first write the numbers. Leave 2 lines. First write the numbers and then write formula. Maybe looking at the numbers, aram se you know what is what. No, put it. Not necessary to mug up. Okay, no? Yes. Online also fine. Everybody? Yes, Macha, you had something? Oh, same thing. Then you don't have to take it to heart. If salvage value is 0, then this will become 30,500. Do the working accordingly for that. Everything will be substitute. That's all. That will not change. Okay. As per which act is this clause? Act Lapath is all done by insurance company. Okay. They have their own regulations of calculating. Actually, there is a lot more for insurance, but again, all these are outdated also. But unfortunately, for the sake of examination, you have to do it. So do it. This is not as per act to clause and all. Okay. Everyone got it? So final answer is what? 22,541. If you have to write something, I shall wait. If you're done, I shall move on. Zoom, huh? Which zoom? The left zoom or right zoom? Right zoom, huh? Okay. Table also you want, huh? No, table not required. You can claim 22,541, correct? That's what I also told. This is the final answer. We can claim 22,540. Correct. Somebody is asking, sir, we have taken policy for 30,500, but firefighting expense is there. That will generally be allowed. Okay. Okay. So, but don't worry about anything else. Just fit the numbers into the format and recalculate. Okay. Fair enough. Is the formula required to be written? Write it ideally, I would say. Institute, they write it in every problem. So I suggest you write it. If I was invigilator, I would have given you marks, but I have normally little extra sentiments for students, so I will give. Okay, not necessary. Everyone should have, no. Firefighting expense won't come, sir. Some problem it will come, some problem it will not come. Okay, I've just written it for the sake of format. Don't worry about that. When it comes, we will see. Okay, you got the overall format of the topic now. Can I move on to the second question? The next question is question number 3. Who is firefighting person? Ambulance guide, not ambulance guide. The firefighter you have, no? You don't have it in your country here? We have here. 100 and what? What is the number? 101, no? 101 we type. I mean, I'm a lovely punching. I've not done dialed once also, but I've seen that pam 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 thing vehicle going a lot of times. Okay, coming back to the topic. Question number 3 now. Let's get started with this. On 20th October 20x1, the godown and the business premises of Aman Limited were affected by fire. So this is the date of fire. From the salvaged accounting records, the following information is available. Stock of goods at 10% lower than the cost as on 31st March 20x1. So have they valued the stock properly or unnecessarily 10% less? They valued at 10% less. Have you seen this adjustment already? No. So that means, can I say they have valued it at 90%, but we have to find out the value for 100%. So same damn thing. Purchase less return. Check the period. What have they given? 1st April to 20th October. Now you tell me, you will prepare memorandum trading account for what period to what period? From 1st April to the date of fire, which is 20th October. So that period ka data we want. Why have they given 31st March 20x1 ka stock if you just check above? Correct. 31st March ka stock itself will become opening stock on 1st April, no? So this is nothing but what? This 2,16,000 is nothing but opening stock. So you have opening stock, you have purchases. Do you know sales? Yes. So opening stock is given, purchase is given, sales is given so far. And then some additional information. Okay, maybe once I'll read off and then go into the adjustments. Putting the things in format. Sales up to 20th October 20x1 includes 80,000 for which goods had not been dispatched. Okay, once I'll read, then I will explain this little later maybe. Okay, one quick read, that's all. Purchases, that means you got to know that there is some adjustment in sales. Let that just sink in. That's all in your mind for now. Purchases up to 20th October 20x1 did not include 40,000 for which purchases invoice had not been received from the suppliers. The goods have been, however, received in the godown. So by reading it, there is some adjustment in purchases. GP rate is how much? 25%. So did they say it is 25% on cost, COGS, blah, blah? If they just mention percentage, the percentage is always on sales. If it is on COGS, clearly they will mention. If not specified, always apply it on sales. Salvage value. The value of the goods salvaged is 31,000. You know where the salvage value will come in memorandum trading account or statement of claim? Statement of claim. And Aman Limited, this particular company, they have insured their stock for 1 lakh. That is your policy value, actual policy value taken. Compute the claim to be launched with the insurance company. Okay. I'll do a thing. I shall put up the things and I'll explain it to you along the way. Okay. So memorandum trading account for what period to what period I need to prepare? From, they have given the data from 1st April. From 1st April 20x1 till the date of fire. Now what is the date of fire? 20th October 20x1. So that is the period for which I need to put up the memorandum trading account for. Okay, so can we get started with that? Okay, first component that will come in memorandum trading account is what, sir? Opening stock. Opening stock means stock as on 1st April. Have they given 1st April ka stock? They have given 31st March ka stock. 31st March ka closing stock only will become 1st April ka opening stock. So how much is the value of opening stock given in the question? 2,16,000. But is that valued properly or was it undervalued? They valued it 10% lesser. That means this 2,16,000 represents 90. But if we want correct value which represents 100. So multiply by 100. 2,40,000 is the value of opening stock. So this is done. Come back to the data. What is the value of purchase less returns or the net purchase that they have given in the question? 2,80,000. That is the value of purchases given in the problem. Stop what you're doing, check the screen. I'll read the adjustment once again for purchases. Purchase up to October. Purchase up to October means this 2,80,000. Purchase up to 20th October did not include 40,000 for which purchase invoice had not been received from suppliers. Goods, however, has been received in the go down. So what has happened is we have purchased some goods from the creditor, some vendor, cash purchase, credit purchase, whatever. All right. We have purchased some goods. Generally, it will be what purchases? Credit purchase, because most of the businesses run on the credit basis. Okay. So you have purchased some goods from your creditor. Worth how much, sir? 40,000. You know what the creditor told? Take the goods. And we took the goods. So where is the goods now? The goods is in our go down. And what happened to our go down? Baga. Fire. Okay, it's on literally on fire. Okay, the go down. So that means these goods, what happened? Go in the. Yes, no. So we took that goods, we kept it in our go down, but unfortunately our go down is on Pushpa, somebody say. Okay, yeah, our go down is on Pushpa, fire. Okay, all right. So what happened to these goods? Destroyed, correct? But purchase invoice is not received. You know what I will do now? I will call up the creditor and tell, hey, you did not give invoice, no, da? So it is, I will treat it as I have not even purchased from you. I will treat it as what? I have not even purchased from you. What do you think he will say? He will literally come with porke, broomstick only. Correct, no? Pakka beelte namge. Yes or no? Can I say that? Or now what? What do you have to do now? Purchase did not include. See, since we did not receive the invoice, did we pass journal entry for it? No. So hence, purchase is not including. This 2,80,000, does it include 40,000 or does it not include? Not include. But that means now will the creditor accept for it, or what will he say? That is your headache. Correct? No, now I want my money. That means as far as he is concerned, it is what? Purchase. He will say goods once sold cannot be taken back. Yes or no? That means is the purchase value really 2,80,000 or I have to include one more? I have to include one more, which is what? 40,000. Because 2,80,000 goods only not is destroyed. Even 40,000 is destroyed. Okay. So it should be considered as purchase. Because otherwise the other person will not accept it. Fair enough, everyone? So the purchase value we should take for our calculation is what? 3,20,000. Did everyone understand why did I add that particular adjustment of 40? Online also okay? Offline cool? Online cool? Okay. Then next adjustment. Then after purchase, what is given, sir? Sales less return. How much is the value of sales given in the problem? 6,20,000. Is there any adjustment for sales? Yes. Apparently there is. Let's read through that. Sales up to 20th October. Sales up to 20th October means this 6,20,000. That they are saying includes 80,000. That sale includes 80,000 for which goods had not been dispatched. Goods did we send? No. But invoice we have already raised. Since we have already raised the invoice, we have accounted it as a sale. That is what they are saying. Sales includes 80,000. You will treat it as sale when you have raised, generally when you raise the invoice. Invoice is raised. So you have already accounted it as a sale. But goods did you send? Okay. Oh, what's your name you said now? Mamta. Let's say I have Mamtas. Okay. Let's say I have sold the goods to Mamtas. Worth how much? 80,000. Small. Okay. I've sold goods to her worth 80,000. Okay. I gave her the invoice. The day I give her the invoice, I will pass the journal entry Mamta's account debit to sales. That is the reason this 6,20,000 includes 80,000. But I did not give her the goods. So where is the goods now? In my go down. And what happened to my go down? Again, fire. Alright. Now can I say, Mumtaz, give me the money? I've given you the invoice. Now give me the money. What will she say? Adela irli, give me the goods. Can I say, I have already given invoice, so it is sale. From my end, it is sale. Can I treat like that? What will she say? You come, Mache, I will see. Correct or no? Correct? So I have treated it as a sale, but in reality, is this a sale now? Because this transaction will become null and Why? Correct or no? Because I will not be in a position to give her the goods because that goods has got destroyed. But have I already included this 80 here? Yes, that's what they're saying. So hence now what I have to do? Deduct 80,000. Understood everybody? Perfect. Okay, how much is this now? 5 lakh? 40,000 is your sales. Clear, clear, clear. All okay? All clear. Awesome. The moment you know sales, automatically you can find out GP because they told GP percentage is 25% on what? Sales. So sales is 5 lakh 40,000, GP is 25%, and that works out to 1 lakh 35,000. Okay. Sir, wages they have not given. I'll assume my favorite number 10,000. If they have given direct expense, take it. Otherwise, ignore it. Okay. Any other direct expenses given or any other data given? No. So wages and all is not there. Leave it. It's just for the sake of format, or let me do a thing. I'll erase it off only. Okay. Everything is available except one thing, which is what? Closing stock, which you will get it as what, sir? Balancing figure. How much is that? 1,55,000. That means the total is 695. Okay. Problem is over or one part is over? Closing stock on the date of fire we have found out by preparing memorandum trading account. Can we put up the final touches in the form of statement of claim? Okay, tell me, what is the first thing I should start with? Let's see how well you're paying attention. First, we have to take stock on the date of fire. How much is that? 1,55,000. From that, what do you have to do? If there is any salvage value, reduce. If there is any firefighting expense, add. If you do that, you're going to get, you can call it as net claim or you can call it as loss of stock. Okay, can we find out that? And then check if average clause is applicable or average clause is not applicable. Okay. First, what is the close stock on the date of fire? 1,55,000. Do you know salvage value? Yes, they have given salvage value to be 31,000. Firefighting expense in this problem not there, so don't worry. If it is there, you add. How much is this number? 1,24,000 is your loss of stock. Now you tell me honestly, will you get 1,24,000 full? You will get 1,24,000 full provided you have taken the insurance policy for the correct value, which is 1,55,000. If you had taken policy for 155, that is the value of stock, you would have got 124. But unfortunately, you took the policy only for 1 lakh. So that means this is a clear, you have taken it only for 1 lakh. So claim you will not get full, you will get only proportionate. So this is a clear case of what, sir? Under insurance, meaning you should have taken insurance for 155, but you have actually taken it only for 1 lakh. You have taken it for a lesser value, hence we call it as under insurance. And in case of under insurance, what gets triggered? Average clause. Apply. What is the formula if you have to construct it? Loss of stock multiplied by policy value divided by stock on the date of 5. So that is nothing but here 124. Loss of stock is 124. Into policy value is actually 1 lakh divided by stock on the date of fire is 155, and the final number works out to 80,000. So I hope the final answer as well as average clause is clear for you. Okay, this is the final claim that gets admissible. Sir, all this form part of answer or working note? Actually, this is a working note. Okay, statement of claim is your answer. That's what they're asking for. This is the answer. The other one is a working note. In fact, you need not write it as working note. You can simply write memorandum trading account. It is fine. No issues. Are you doing all easy topics first? Everything is easy on. Who told? Yes, CA is only easy. CA is like chakli angdi. Just go and get some chaklis. That's all. Finished? Okay. Sir, what if average clause is not applicable? Let's take off that scenario also. I think there is one question there. Check here. Without average clause. Can we look at this example once? With average clause, you know how to do, no? And anyway, in every problem, anyway, we have to do. Without average clause also, if they give what to do, you should know, no? Just one example is there in your first page. Let's look at that. Sir, they are told stock on the date of fire is 3 lakh. Salvage value is 120. That means what is your loss of stock? You tell me. Loss of stock is nothing but 3 lakh minus 1 lakh 20,000, which is nothing but 1 lakh 80,000. This is the loss of stock. By now you're comfortable with that, I think. Now check. No average clause, okay? Proportionate will only happen when there is a average clause. Here they're clearly saying this is without average clause. Calculate the amount of claim if the amount of policy in case 1 is 1 lakh, in case 2 is 2 lakh. In first case, you have taken the claim for how much value, sir? 1 lakh. Second case, you have taken it for 2 lakh rupees. Are we good with this now? Now tell me. You have taken the policy only for 1 lakh. Loss you have suffered is 180. What do you think insurance company will say? Macha, take only 1 lakh. Because insurance is a contract of indemnity. You cannot make profit from insurance company. Insurance is only for risk coverage. Okay. So since you have taken the policy only for 1 lakh, though you have suffered a loss of 180, they will only give you 1 lakh rupees. Proportionate formula are not required. Straight away. What if you have taken for lesser value, whatever is the policy value, that much only maximum they will give. Here policy value is how much? 1 lakh. So they will give you 1 lakh and more. People okay? Case 2, you have taken it for 2 lakh. Now you get excited. I've taken it for 2 lakh. Give me 2 lakh. No. Will they give? You can ask star, moon, 2 lakh, whatever. Will they give? What will they say? I understand, but please understand. They will give you one diplomatic answer. Please understand us also. You have suffered a loss of only 180. So though your policy value is 2 lakh, loss you have suffered only to the extent of 180. So in case 2, your claim only will be restricted for 180. Formula will not come straight away. Straight away dealings. Okay. This generally don't get asked in the question much. They will give you average clause, but just was an example. So thought I'll quickly cover it also. So you got a fair idea how this particular loss of stock kind of works out? Yes. Thank you.